Welcome back guys to another video. Today is Tuesday and you already know what happened every Tuesday. We have the webinar from 5 to 6 p.m. in Australia time. So make sure to register yourself. On the description of the video you will find the link for the registration, and then as well as you will find the link for the Telegram group. So Telegram group is basically a Telegram group where I share my macro analysis pretty much every day. I try to be consistent. Sometimes I'm a little bit busy with other stuffs, but most of the time, majority of the time, I'm in there, all right? And on the webinar, of course, you can ask me questions. I can give you my personal opinion on the topics that you may ask for me. And we can, of course, have a sort of a one-on-one interaction there. Now, okay, before we start, I would like to say some things here, all right? We have two major things happening today. We have the RBA and we have the CPI from Eurozone. I don't want to touch much about the Macron thing, the Frexit, the France getting out of the Eurozone, because I want to touch base more on this on the webinar tonight, this afternoon actually. But I want to give an understanding on how this can make the euro very weak tonight, of course. But for today, I want to set it up a sort of a base where you guys can understand why I'm thinking that the Eurozone inflation can come as expected, and we're going to have a look at the numbers as well as the RBA, okay? Let's just start with the RBA. I have here a little note down I've done, so let me grab it for you all. So first of all, we need to understand that the Reserve Bank of Australia don't only rely on, inside data. It relies as well on outside data, like China. All right. So we had some disappointing industrial production data from China yesterday, and this, of course, is indicating the economic recovery is not gaining a momentum. All right. So if today the RBA meeting results in a dovish stance, combined with the weak Chinese data from yesterday, it could lead to an Australian dollar sell-off. And of course, especially with the strong US dollar that we have at this moment, this will combine on a nice short trade on Australian against the US dollar, in my opinion. All right, I'm not saying that this will happen. This is, of course, a very risk trade because you are trading on an economic news. But if they pause the rates based on another dovish stance, okay, they need to have a dovish stance. This would lead to a big sell-off on the Australian dollar. Now, if they have a dovish stance, and even though that the market went up, most probably this will reflect into a couple weeks ahead, all right? And then we're going to have a decrease on the Australian dollar. Now, that has been said, let's move on to the Euro CPI. This quote that I've just read it's from Prime Market Terminal, so I just want to give the credits to them as well. Now, the Eurozone inflation, the CPI tonight, is expected to come at the CPI year over year from May last year to May last month to this year, is expected to come at 2.6% from the previous of 2.4%. The core CPI is expected to come at 2.9% as the previous 2.7%, but the month-over-month, that is the one that will trigger the market a lot, is expected to be at 0.2% from the previous of 0.6%. Now, this is a really, really big trade that can happen on euro dollar on the upside, okay? Now, the thing here is, okay, because we have a previous of 0.6% of month over month, and the consensus is at 0.2%. If it comes above 0.6, this will be really, really pushing the euro dollar higher, all right? It doesn't matter. Even not only euro dollar, let's say that the Australian dollar, the RBA has a dovish stance, euro AUD would be a very good trade as well to have on the portfolio, because if the RBA do a dovish stance, therefore the Australian dollar will be very weak, and the euro, if it comes above 6%, above the previous, that will be generating strength to the euro as well, and then euro AUD would be higher. All right. Again, everything that I'm saying here is not you to go and trade it. It's just a general and broad analysis of what can possibly happen. All right. I'm doing some scenarios here, so please use your own strategy. But of course, get some insights from me, but don't do what I'm telling you. All right. This is not a personal advice. Now, that has been said, the CPI year over year is expected to come only 2.2 higher than expected, higher than the previous. If it comes 0.2, that's all right. But the big one here that will probably move the market is the month over month. After that, at 10:30 p.m., because the CPI is at 7, 10:30 p.m. tonight, we're going to have the retail sales and the core retail sales for US dollar. This is expected to be stronger for the US dollar. Now we have another tricky scenario. We have a tricky scenario where the euro will be strong and where the US dollar will be strong. What are you imagining that can possibly happen here? Well, either way, the market can go really, really high, or the market can go really, really low. To get a precise answer of this, I'm going to be diving deeper and showing all the facts tonight on the webinar. So if you want to listen to this, please go at the description of the video, register for the webinar, and I see you there tonight. Before we finish it, guys, please subscribe to the channel, give us a thumbs up on this video, and share this content with your friends. This way you show the YouTube that yes, you are liking the content you're seeing, and then therefore they will spread out to more people hungry to learn as same as you. All right, guys, thank you so much. I see you tonight, or I see you in the next video. Bye-bye.